Happy Monday once again, everyone. Bryan Devore, Devore Realty Group, Berkshire Hathaway Home Services, California Properties. Hope you had a wonderful 4th of July holiday. Maybe you had a long weekend. That would be fantastic. We are now in the second half of the year, as we discussed in the last Monday Market Moment. So I thought we would do a little bit of a recap of this year versus last year. So we'll get to that in just a moment. Let's look at today and the current stats. Right now, we have 4,485 homes for sale throughout San Diego County. It's actually a decrease of 77 homes. First time we've had a decrease in quite a while. Interesting. Median list price $999, no change. Average days on market 43. The pending sales 2396, minus 14 from last week. So fewer homes for sale and fewer homes in escrow. Well, that number is smaller. Median list price $875, lower than last week. Average days on market, no change, 25. Months of inventory is actually up to 2.3. That's higher than it was, and that's really because of the number of closed sales, which we'll get to in just a moment. Here are the totals in chart form. As you can see, we saw a steady run up in the number of homes for sale week after week. A drop last week. Pendings also dropped a little bit, but it's still hanging around where it has been. How many homes came on the market last week? 678, 153 fewer than the week before. Why? The holiday. People weren't putting their homes on the market. They were getting to barbecues and celebrating the holiday. Median list price $995, higher than the week before. New pendings 346, 80 fewer than last week. So we saw a dip in the number of homes that came on the market and a dip in the number of homes that went pending. But that number is about half of what the drop was in new actives. Median list price $899, 444, lower than the week before. No change in the average days on market versus the week before, 21. New pendings listed within the last week, 17. New pendings listed within the last 2 weeks, 140. So 5% of homes are selling in a week or less, 40% in 2 weeks or less. How many homes closed escrow last week? Another big drop, 353, 75 fewer than the week before. Escrow companies were closed on Thursday, so even if people wanted to close escrow, they could not. So was the county recorder's office, so that's why the big drop there. That's why the higher months of inventory. Median list price, $900,000, lower than the week before. Median sales price, $920, also lower than the week before, but median sales price still higher than median list price. Average days on market, 20. One fewer day versus last week. Least expensive sale was a condo in downtown San Diego for $230,000. Most expensive sale coming in again, La Jolla, $7,295,000. Here's a chart showing new actives, new pendings, and new closed sales. You can see that the fewest number of new listings in quite a while. And again, the holiday probably had something to do with it. Let's see what happens next week and see if that trend continues. One thing we want to keep an eye on is the number of closed sales was higher than the number of pending sales. So that means that homes are closing faster than they're going into escrow. Now, if you have more homes going into escrow than closing, you're going to see a really healthy market. Homes are selling faster than they're closing. But if that switches and we have more and more homes closing escrow, but fewer going into escrow, that's where we start seeing a big shift in the market. We'll have to see if this week was just an anomaly. Here's the median list price and median sales price in chart form. Again, just bouncing around from where we have been. Here's just a snippet of an article I saw in the Union Tribune. Breaking news, the median price of a San Diego home crosses $1 million for the first time. That's obviously big news. I remember when I started in real estate almost 21 years ago, we weren't even close to that. I remember when it eclipsed 500,000. I thought that was high. Affordability is becoming an issue, but prices are still going up. All right, let's compare last year versus this year. First half versus first half. 2023 through June 30th. Total sales was 11, I have a dollar sign there, but it's actually 11,667 total sales. Median list price, $800,000. Median sales price, $815,000. Average days on market was 26. Now let's look at 2024 through June 30th. Total sales, 11,623, so 44 fewer homes. So we were talking about how the number of closed sales is way down versus last year. Not by a lot. 44 is a very small percentage of 11,666 or 667. Median list price $889 plus $89,000 over last year, 10%. So about 10% higher median list price of the closed sales this year versus last year. Median sales price $895, up $90,000. So again, about 10% is the median list price has gone up roughly 10% year over year. And when everyone's talking about, the sky was falling, the market is going to take a big drop, and it did not. It went the other direction. Average days on market, 22, 4 fewer days. I was a little surprised about that. The homes that closed escrow this year versus last year are taking less time for those homes to sell, even with the higher interest rates. We're talking about interest rates maybe coming down. There's some talk about that in the not too distant future. Let's see how that affects things for the second half of the year. I'll look forward to tracking this year versus last year towards the end of 2024. That's it for this week's Monday Market Moment. Don't forget to scan the QR code to track your home's value. If you have any questions about the market or what it may mean for you, whether you're buying or selling, feel free to give me a call, send me an email or a text. I'd be happy to chat with you about that. That's it for this week's Monday Market Moment, and hope you have a fantastic day.
Thanks for watching Monday Market Moment with Bryan Devore. To request a transcript of this week's report, send an email to brian@devorerealtygroup.com.